Welcome back. You're watching Markets Midday. The market's flat at this point, both the Sensex and Nifty absolutely flat, but you can't complain when the markets are at a multi-month high. And to talk precisely on that, Ajay Argal, co-head of equity investments at Birla Sun Life Mutual Fund, now joins us. Welcome to the show, Ajay. What's your sense, Ajay? The market's fully priced in the fundamentals at this point, but do you think liquidity can take it higher?
Liquidity has been pretty strong in the last few days, and definitely there seems to be a view by the foreign investors that the currency is going to appreciate. So I think both in the debt as well as equity markets we are seeing a lot of inflows because of that particular reason. And the global backdrop is very stable, so that is also a crucial factor. As long as the global backdrop is stable and our results around the corner, the corporate results, where the expectations are pretty good in terms of at least 20% profit growth, and that continues, we can have some more leg up, but one has to keep in mind that the valuations are fairly valued. There is not much room for appreciation in the near term.
How are you positioned on the sectors, Ajay? What are you liking at this point, and which are the sectors you feel are overvalued?
Some of the sectors which we like at the moment, one is of course the construction space. Within the construction space we are more positive on the mid cap purely because of the valuation differential between the large and the mid caps, and the business dynamics there is very strong. The order flows have started coming back after a lull due to the elections last year. Similarly, in the capital goods sector, we think that we are at the cusp of the start of a capital goods expansion cycle again, and the order flows are started in some cases, and it will start in a big way in the months to come. So there also we are positive. We continue to remain positive on the pharmaceutical space because we think that the growth is still continuing. The valuations are reasonable. They are not terribly cheap, but they are not terribly expensive either. And some of the sectors which we think are overvalued at the time, we think consumer non-durables, that is the fast moving consumer goods, because we think that the valuations are pretty stiff, and at the same time the competitive pressures are very strong with all the companies having to make a lot of expenditure on advertising, and the competitive backdrop being very tough all the time. Similarly, at the moment,
out of auto, is that what you're saying?
No, I was mentioning about fast moving consumer goods.
Okay.
And similarly on
consumer durables, like for instance auto index, that's had a fairly stellar run over the past 2 years. Is that a profit booking type at all?
We have definitely reduced our positions in the automobile space, and therein we think that there is still some scope left in the four-wheelers, though in the two-wheelers the stocks have already done their bit and already discounted all the good growth which is going to come in FY11 also. Also we are a bit more positive on the auto ancillary space because of the valuation differential between the frontline auto companies and the auto ancillary companies. So we have shifted our money somewhat from auto to auto ancillaries.
Okay. What about realty? That's clearly the rank underperformer if you looked at it from a year-on-year perspective. And yet you hear of fairly big deals and higher prices in certain towns like Bombay at least.
Yeah.
So when does that get translated into realty? Will you look at those stocks?
Yeah, I mean we are kind of neutral on realty. We are not very positive. The reason being only traction is coming in the residential space. We are still not seeing any pickup in the commercial space. The lease rentals etc. are not picking up. Even in the commercial space we have seen the prices going up, and especially in Bombay the prices have gone up quite a bit. But whenever the prices go up quite a bit, we are seeing that the volume of transactions are coming down. So we don't think that that kind of strength has still come back to the real estate market, and it will take some time. And at the same time the balance sheet of the real estate company is not very strong. It has definitely improved because of the money raising in the recent past by some of the companies, but still there is some room for improvement.
All right, Ajay, thanks a lot for joining us with those
Thank
details. Well, let's shift focus now. Actually, we've got some breaking news. The